This week, all locked up. American homeowners struggle to tap into record home equity.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. Despite holding trillions of dollars in home equity, U.S. homeowners are struggling to tap into it. That according to a recent report published by Point, an alternative equity release company. Point's newest analysis shows an alarming trend. Many U.S. homeowners don't have a clear path to accessing their home equity. Riding the wave of rising real estate values, homeowners in the U.S. are sitting on a record high level of home equity today, says the report. Homeowners have been paying down existing home equity loan balances as shown in this chart, dropping 48% from its peak in 2009. However, those wishing to tap into their equity today find themselves facing significant headwinds. And one is tightening credit standards from banks and lenders that are reducing the number of qualified applicants. And in addition to stricter lending guidelines, a steady series of interest rate hikes by the Federal Reserve has made home equity loans less attractive for potential borrowers. Point's publication notes that a homeowner who had purchased their home in the summer of 2020 for $310,000, for example, would likely see their home's value climb to $435,000 today. That leaves over $200,000 in equity, which just so happens to be about the average amount that is held by homeowners today in the U.S., according to an August report from Black Knight. However, if they were able to qualify for a $50,000 cash-out refinance loan, their monthly mortgage payment would more than double as their monthly payment. Now, who after all would want to refinance their existing 30-year fixed-rate mortgage at a low rate into a new rate of at least 8%? And this leaves home equity exposed to ride out the real estate market's trajectory, which many industry pundits are now increasingly calling uncertain. On paper, it's a great time to own a home and grow net worth, but it's like having a debit card and never being given a PIN, writes Amanda Woolley in the report. Not having a means to tap into home equity is one thing, but to see a portion of that equity or a good percentage of it disappear is quite another. A particular risk for homeowners in metros that saw the biggest gains in home values in the last 3 years. HELOCs, or home equity lines of credit applications, surged throughout 2022. However, lenders have been increasingly wary of the loans. HELOCs are relatively risky for banks because the credit line serves as a second lien that's paid off after the primary mortgage obligations. That according to Bloomberg. And consequently, some banks have actually ceased offering HELOC loans. Chase Bank's HELOC FAQ page notes, while Chase is not offering new home equity lines of credit, here are answers to commonly asked HELOC questions. Interesting. However, Chase does continue to offer the cash-out refinance, which do not have the risk of being a subordinate or a second lien position. So what other options exist for today's equity-rich homeowners outside of costly cash-out refinances, the report asks? Reverse mortgages are one option for homeowners who meet the Federal Housing Administration or FHA standards that are set out in the Home Equity Conversion Mortgage or HECM program. Qualified borrowers may find their key to unlock their accumulated home equity by using a reverse mortgage. And unlike a HELOC, the credit line cannot be frozen in a HECM or reduced when market conditions change. Now, the challenge for originators is to sift through the homeowners who have high mortgage balances or a credit history or financial capacity that disqualifies them for a reverse mortgage. But the key in these challenging market conditions is going to be to increase sales activities that will generate a larger pool of potential borrowers, and that helps offset the lower conversion ratios that we're seeing today. Now, just a word to our viewers, I am not a financial advisor. I'm a reverse mortgage commentator. Always seek the advice of a trained professional before you engage in any financial product or loan. And that being said, please share today's video. I appreciate each of you that do that on LinkedIn each week. Also, don't forget we have a YouTube channel where you can subscribe and listen to this show and others here at Heckham World. And don't forget, each and every week you can listen or watch our weekly reverse mortgage podcast. It's the only weekly podcast in the nation for reverse mortgage professionals. And you can also subscribe there. You can listen on Apple Music, formerly iTunes, Spotify, Podbean, or here at heckhamworld.com. Thanks again for watching, and be sure to return next week for more reverse mortgage news, commentary, and analysis that you'll find nowhere else except here at Heckham World. Have a great week.